Good morning everybody, welcome to Stockradar Stocks on the Move for another week. Today's date is the 14th of August 2025. My name is Richard Lee and I made the stockradar.com.au website for you. Well, reporting season is delivering. We've had some great results from stocks like CBA, JB Hi-Fi, Telstra, all getting marked down considerably, all offering great yields. So go figure what the outcomes are going to be sometimes. HGL took a crash. There's all sorts of things going on in the market, but we'll take a little step back, just have a look at what's really going on and looking at our trends, which is where we take our solace from. Okay, so the miners are looking interesting. We balance the excitement of the emerging miners with the realities of the high return industrials, and there's some great stocks there. We're going to look at some of those there. We did have the day of the minnow miners a while ago, but the real stuff is now beginning to build amongst those bigger miners at the moment. So lots of stocks going up. We concentrate on our stocks, stick to our knitting without getting diverted from what we know best. So excuse me, our market is the top 200 sector. There's plenty of stocks moving there, plenty of things to be made. There's also some good yields there, and so that's where we like to operate for the most part for us. Okay, so firstly we're going to go through to, miners to do some heavy lifting. So we're looking at some miners. They're not all doing anything just yet, but the excitement may be about to build. So we'll keep an eye on that for you. The top 10 intensity rankings. Okay, ALQ, APE is another consumer discretionary stock. We looked at those last week and they're doing pretty well. Deterra Royalties is a new one. Linus is a rocket. MP1's doing well. Newmont Mining is one of those big heavy lifting miners. Neuron Pharmaceuticals, Orica and Mining Services doing very well, Regis Healthcare, and there's Wesfarmers, which has just crept in as it starts to make a little bit of a spurt higher. So there's a lot more top 10 ratings at the moment because the market is pretty hot, but there's a few of them there for you just to start with some of the stocks that we hold. Our stock picks count this week is up another 3, so we're just edging higher and higher. 59 stock picks from 160 stocks covered at the moment. So slowly building. I think it was 3 in and 1 out last week, or 4 in and 1 out last week. Okay, so let's firstly go to look at the overseas markets. No real change there. Dow's back testing its highs, looking pretty good. The S&P is through its highs and looking quite strong there, as you can see, and also the Nasdaq. So we're not really too worried about those. They're going well, good volume. The trends are intact. They're making new highs. So that's all happy days for us as far as I'm concerned. Our market itself is also making new highs as well. It's had a bit of a slow start to the week, but there's plenty of excitement happening there. And again, we saw stocks like CBA whack the index yesterday, and it probably will again today. But that's just the way it is. I'm not too concerned about that. It's the stocks that we hold that we drive that drive our returns. Okay, so let's go to commodities. Gold, it's come big up, but tried to break through those highs and come back a little bit. Still holding up fine, no problem there. Copper, it's had its whack down. It really hasn't done much the last week or so we're not too concerned with that one. And Brent crude has sort of slid a little bit from what we saw last week. So again, it's in struggle city still at the moment, Brent crude. But we do notice that Woodside is actually been creeping up quite nicely of late and showing some demand. It's had some good news there over the last few months, and it's starting to get a bit of buying support there. So for Woodside, you should go and check out the trading centre on that one. It's looking very, very interesting at the moment. Okay, so that's their portfolios are all still pretty full at the moment. We've got some miners in there, Newmont, Linus, Mineral Resources, and coupled with the industrials, APA, Qantas. Qantas had a good rise last week, yesterday. Wesfarmers, Harvey Norman, ResMed's breaking to new highs. Telstra's doing really well, and Hub, of course. So there's just a few of the stocks and our portfolios at the moment doing well. And we've covered the overseas markets. So now we get into the good stuff, which is the Australian stocks. So we did have that run of smaller miners earlier this year and late last year. Genesis Minerals, Capricorn, Emerald Resources, all doing pretty well. Now the biggies seem to be finding a bit of support there. Some of those smaller miners have come off the boil there, been replaced by things like Linus and Mineral Resources, which has come off a very low base. So there's buying interest in some of those bigger miners there. Steady industrials, of course, are still chugging away. I mean, CBA, Telstra, JBH are all still fine. They might have a break of trend there at the moment, but they're all good stocks. Harvey Norman, Challenger, Qantas, ABA, I mentioned those in the REITs that we still hold. Charter Hall, Long Whale, CQR, Stockland, and then again I mentioned before Newmont Mining. So there's plenty of good stocks holding there. CBA and GBH are the darlings that are getting hit, so it might be interesting to see what happens with those. And that's also a good thing for what our story is a little bit about today, about some support for those bigger miners starting to come through. So we'll have a look at a couple of them today. Not all of them. You have to go across the trading centre to look where those big ones are sitting at the moment, as in Fortescue, Rio, things like that. Okay. So we recently added Mineral Resources, IGO 360, two big miners to watch, which we talked about in the energy sector and the iron ore sector. A small stock we saw last week, Nick Scali, is been doing really well as well. So gangbusters for the market. Just remember to keep your balance and your poise. Don't get too carried away with things at the moment. So as I said before, we had in this week we had one diversified financial, one transport, three metals and miners stocks. Coming up, we've got some couple of the banks looking interesting. I know Westpac's looking interesting today. Some health stocks, consumer services stocks, metals and mining, and that's about it for there. So go across to the trading centre, have a look at all those stocks that are really on the ball at the moment. So firstly, we're going to get into Wesfarmers, which has had another little spurt higher. We'd like to look at this stock. It has been for a while. It's been doing very well since it started 2024 and it broke out of a big flat top triangle. Had one run, went sideways for 6 or 9 months. It's now having another run. We're getting this impulse type move. So its trade intensity rating is 10. It's making new highs. It was about $50 at the start of 2004. It's now nearly $90. So it's been an amazing rise, even through that corrective phase during the late part of 24 and the early part of 25. But it is certainly back on track and rating at 10 at the moment. We can see a lot of the volume here, great momentum, well above the average, so it looks fantastic. ResMed, a few of those health stocks are looking interesting, and ResMed is one that's made a new high there. Let's go back to ResMed. It's making a new high there. You can see the old high back there at $40. It's raced through there, came back, made a new higher low, and has raced through there. Volume has always been a bit tricky on ResMed, so we can't really go based too much on that. It's above the average. The price trend is high highs, high lows, which is the main part of it, and the price momentum is also good. So for ResMed, it's rating a trend intensity rating of +9. We looked at Super Cheap Auto last week. I like some of these consumer discretionary stocks that are still going well. Some are picking up the mantle. I know JB Hi-Fi's had a little bit of a stopping the last day or so, but we've got things like APE and this one here, Super Retail, which I quite like the look of, mainly because we did look at it last week, I know, but it came back to this big support area there, just above $12, $13, and it's really quite nice. We found some good support here. We had a good test here with some good buying and selling going through this point here, and eventually the sellers went away and the buyers have now driven this price higher. Again, sometimes a little bit light, these consumer discretionary stocks, so the volume's hard to read, but we do like the volume, so we do like the momentum, which is starting to turn positive, and the moving average is above the moving average. So we've got this R1, R2 area, which is the main resistance area there for the moment. And if we can get through there, it'll look pretty good again. But it's already looking pretty good at the moment, having risen pretty quickly off that $13 level, now to be $16. So $13 in April, $16 in August, so not too bad at all. And Eagers Automotive, another consumer discretionary stock which we looked at. We didn't look at this one last week, but it's also made new highs recently. Had made a new high, came back and pulled back to support there, and it's rode very nicely from there. We've got great demand coming through here, momentum is strong, and it's well above the moving average, high highs, high lows, driving a trend intensity rating of +10. So I know I'm getting a bit excited about it all, but the market is doing that to us at the moment. That's why we need to step back, take a deep breath, and look at things rationally. But there's some very, very good gains happening amongst our stocks at the moment. Can't get them all. Just make sure the ones you are on are making the gains. And even if we go across to consumer staples, Metcash seems to be doing pretty well. Now it was around about $3 in March. It is now above $4. So it's had a pretty good run over the last few months, and it's now running trend intensity rating of 9. It's got through some significant resistance through here. 480 is the next main resistance. Price is currently about 407. So an interesting looking select Metcash. It flies under the radar a bit. Does what it wants to sometimes. But if you look down here, some fantastic volume, some great momentum, and it's well above the average. High highs, high lows. Rating, trend intensity rating +9. Just because a little bit of a slip off there, it's now back on track again. So it's looking fantastic, Metcash. So there's some good industrial stocks for you that are doing pretty well. Now we're going to go across to BHP. Now, some of these big miners, there's Rio, there's Fortescue, there's Woodside, there's a few of these big ones that are looking very interesting at the moment. And BHP itself, we talked about this one a few times, and we know there's a big support down here at above about $36, which had a double test there. And then so that's the first part of our reversal pattern there. A reversal process, I should say. So the support held there, which is a good thing. Support is always the first thing we'd like to see. Then we'd like to see follow through. So firstly, it has taken out the recent high there. We didn't have enough trend intensity rating to call a trend reversal there. So we're still being patient there, but we're still developing the way we want to see it. It's above the average now. It's had a good week this week, so it's looking pretty interesting. Trend intensity is moving up to -4, so it is looking quite interesting at the moment. So if I just squeeze up this volume here, you can just see some nice volume attached to this rise, and momentum is about to turn positive. So it's going to be coming up very shortly. So keep an eye on the trading centre for when BHP hits the buy button. Okay, so that's BHP for looking very interesting again. Linus, well, we know Linus, what it's done. Again, a pretty amazing rise, really. Okay, so from around about $8 here in sort of May, it's now above $13, nearly $14. They can really move these mining stocks, we know they do, but trading intensity rating of 10. If you can get onto them, well and good. Just going to make sure you protect it, so make sure you know where your stop is, because this is a good gain and you do not want to let it escape. Okay, so with our strategy, even when our stop loss goes off, we can always buy a new high if it does tend to rally again, so we can protect our profits, stand aside, and if it comes down, well and good. If it doesn't make a new high, we go again. But we work with our stops all the time, so we're always making sure any losses are minimised, but we also make sure we maximise the gain of a trend and don't let the winnings escape. So Linus is still looking good, trend intensity rating 10, and it's broken some big resistance here, so it's moved to new all-time highs, which is a very positive thing. We can see the volume's been fantastic, momentum's great, and it's well above the moving average. So Linus is fantastic. Datura Royalties is one which we looked at for a while on and off, and it really just couldn't make any headway. But finally, having come right down to around about 320, 330. It's finally created a trend reversal and starting to rally. Now, it looks very interesting because we've got some wonderful volume here. Momentum's turned positive. It's above the average. All the signs are pressing go, are green at the moment. So for Datura Royalties, it's doing very well and looking good at the moment for a new trending phase, which has been a long time coming. But finally, it looks like it's going to happen at the moment. So it's developing well. Its neck resistance up around $5.40. Okay, and the only other one I want to cover today is a little one that I've been looking at for a while, which is the Australian Finance Group. It had a nice little rally yesterday, kicked above the highs there, 234. It really has broken out of a big accumulation pattern back down here, and it's now had a good breakout, good nice little pullback, and it's now rallying higher again. But we also see down here, if I just squeeze up this volume a little bit, you can see some fantastic volume has been attached to these rises. Momentum's been very good, so it's looking very good, AFG. And as to where it's going to go, well, we don't really know. We just follow with our stop. The old highs are probably up around, looks like about $3 for AFG. So that's just a little stock we've been looking at. There's a few other ones we're looking at, like Qualitas and stuff like that, that are also doing really well. Okay, so the market's pretty good at the moment. We've got lots of things happening there. You just got to try and keep yourself contained and manage what you've got rather than try and shoot for everything. Okay, so be pretty careful about that. Okay, so just a couple of little words of wisdom today. I did mention in the start of it, you've got to have balance, the excitement of what's going on with what we need to go. Now, a lot of my clients run their own superannuation funds, the majority, 70% of my members, and so they're going to be very astute, very careful with their money. So the one thing we don't want to do, especially in times like this, we've got to be very careful. We don't want to put all our eggs in one basket. So I'm trying to show you a balance of stocks today where there's some good miners, there's some good industrials, there's some rotation going on out of some stocks into other stocks. So you've just got to follow these trends and be smart and sensible about what you do, okay? So don't forget the industrials deliver steady trends and they usually yield well. So they're always good to underpin a portfolio. And you saw some of those stocks today, whether it's Wesfarmers or Metcash or APE or whatever it might be, Harvey Norman, they're all good stocks to hold in a portfolio. Not all of them, but you just need a good group of them to make sure you underpin your portfolio. So that's an important part of it. As far as the miners go, The big miners, you can have some volatile trends. You've got to be a little bit careful there. Got to pick your times a bit, but we don't really time the market. We just follow the trends more than anything. So we look for the higher highs, higher lows. Looks like BHP might be getting into that sort of position. Some of the other miners as well. So that's where we look to get set, because we haven't really been in those stocks for quite some time. Fortescue, Woodside, BHP, Rio, we've been standing aside as BHP comes off that $50 area and came right down to $36. So we just be careful with our timing on those things. So now it looks like there might be something happening there. So big miners, they're volatile trends, but they do yield well these days, whether it be Rio, Fortescue, BHP or Woodside. They all offer good yields at the moment. So there is a time for these. Now may well be the time to look seriously at these big miners, okay? So the small miners, okay, they're volatile trends with no yield. So they're a danger for a portfolio, especially for superannuation clients. A lot of my clients might have 10% of their money is play money, which they play with, but the majority of your money's got to be in the solid stocks, good industrials, good miners when the times come, things like that. So you've got to be fairly clever about how you approach it all. So small miners, volatile trends, no yield. So they don't offer any yield for holding them. So really they're clearly quite a dangerous area. That's why they can be so volatile. So there's a small low exposure place for these, small low exposure, not heavy exposure. So one of those periods looks like it's just passed. We did make some good gains on some of those stocks, but it looks like that's it's passed from now. And the mantle is moving from those smaller miners onto the bigger miners. Okay, so as I said to you before, most of my members run their own superannuation funds, okay? So there's a discipline in doing that. Okay, and rather than just being going home and saying, I'm going to buy this, sell that, they've got to think about what they're doing, got to think about where they're going to be in their retirement, are they going to have money, things like that. And it's important, and not just for them, but for their wives and their families as well. So there's a responsibility there. So before you get carried away, in the back of your mind, you should always carry these common sense thoughts with you when I'm talking about the industrials that underpin a good portfolio. So it's smart, responsible, and sensible to do this sort of thing and not get carried away in times like these when there's things going all over the place. Okay, so above all, the qualified trend is your friend. Okay, that's all I do is I follow trends. Okay, I don't go against the trends. I just follow them. I wait for them to develop and I jump on them and I try and jump off them before they really get whacked. I always make sure my stop follows the trend up higher, and I don't really try and pick the market. It's a money management thing. If the price goes back X amount, and you look at CBO this week, it might go back below its stop. I don't know, but we'll wait and see. But I'm not going to risk anything there. I'm going to make sure that I've kept my gains there. So, especially when it is also wrapped up in a safety net of risk management, which is what I'm talking about now. Your stop is so important to manage all these positions and not get carried away with what you think and your emotions and what your mate says next to you. Okay, so just be very careful. So the risk management strategy, the key is there is to always minimise your losses and maximise your gains. So you don't let your gains escape, and you also make sure your losses don't get too big, because carrying drawdowns is a big heavy weight, mental weight, and nobody wants to do that, or I don't want to do it anyway. So the fact is sometimes we do get it wrong. That's a fact of life. So we use stops to do that. We might take a signal, we might get stopped out at our 15% maximum stop. That's so be it, but that's where our limit our losses. That's how big they're ever going to be. So that's the important thing. So that's really what I want to talk about today. Just keep your head on your shoulders, not too far in the clouds, and just manage your positions very carefully, okay? All right, so that's all I've got to do this week. It is an exciting time in the market. There's some great money being made at the moment, and that's the name of the game. So make sure you keep your balance. Balance is a signpost of perpetuity in the stock market. Okay, facing off the crowd becomes a comfort and a joy as you sail through the jagged waters of the stock market bumps and grinds, following the trend. So we can always see these bumps and grinds in the stock market. Just follow the trend; it will help you sail and navigate through those jagged waters. Okay, so that's about all I've got for you today. I hope you enjoyed it. Watch your trends, heed your stops, keep it simple, have fun, stay safe, and I'll see you all next week. Okay, thanks very much.